Hey guys, hope everything's going well. You guys know that drill. Smash that like button, subscribe if you haven't, and comment down below. Follow me on Instagram at AIH_sports. Follow me on my finance channel at AIH Finance. You got your popcorn ready for tonight's live stream? I hope you do. It's gonna probably be crazy like I stated before, but once again, this is gonna be one of my most interesting live streams that I've done on this channel. I think the best live stream that I've done is with Don. This was February and March of last year. Or not the live stream, but a podcast, live stream, whatever. I think that was the best one because Don called basically the top, right? February and March of 2021. So this is going to be fun. Anyways, I wanted to discuss how the change in sentiment I'm noticing more and more. And go back to February and March of 2021. Remember how everyone was jumping up and down, right? All the blinders were off. And now people are being more cautious. And I've seen some influencers, Don Diego, for instance. Don Diego, I think, had an Instagram post where she said that she's worried for the hobby, or the hobby isn't going in the right direction. I didn't see this type of talk, when prices were extremely high. So it seems like a lot of people respond to what the weather is today. They don't forecast the weather out maybe a year from now, 18 months from now, right? Markets are forward looking. And I was also looking at Jeff Wilson about some of the whales and liquidations going on, some of it maybe for tax purposes. I think one of the dudes was talking about that. That was interesting. P. Ryan Collection had a really good live stream on Instagram last night. He was talking about how a bunch of these auction houses, for the most part, they don't want to sell their top cards right now. PWCC, for some reason, has all of these scarce cards, these one-of-ones, and they're all in this auction, and it doesn't look good for him. And he looks at the high end very closely. And I'm just thinking to myself, this is quite interesting. And P. Ryan, by the way, was bearish, I believe, close to the top of the market from my understanding. So I'm not putting him in that same category as the pumpers, okay? I really like P. Ryan's work, by the way. So want to point that out. So I'm just looking at this, just change of sentiment. A lot of people are nervous, et cetera, et cetera, et cetera. What am I noticing on the monetary policy end, right, that I look at very intensely? I just saw the Fed say that, hey, we raised rates, but we're probably not going to be as aggressive moving forward, okay? So they raised, what, Fed funds rate 75 basis points. It's above 3%. And then I'm just thinking, okay, they'll raise it a little more, maybe 50 basis points, and then maybe 25 basis points, and they stop. And then what if within the next 6 months they decide, hey, we've stopped raising interest rates, but now we're going to be looking to cut interest rates, right? And as I've stated before, I've showed in previous videos that the collectibles market is very sensitive to higher interest rates. So going back to what P. Ryan was saying, he was saying that, hey, we're seeing a lot of fear right now. A lot of people don't want to sell. This could be the next 2008 situation, et cetera, et cetera, et cetera. Talking about The Big Short, I believe. I think Michael Lewis. And what I'm thinking is, if a lot of people are nervous, is it because they're having a hard time financing their projects or whatever business expenditures that they have? I'm just thinking that, because suppose it's a wealthy individual, and instead of putting very low interest rates down, they have to put up way more collateral down. They have to pay a higher interest rate, because of the situation that we're going through because of monetary policy conditions. So there's less money out there for collectibles. Not only that, there's less stimulus coming from the government. And the minute that the Federal Reserve says that we're going to cut rates, you may see the opposite. You may see people having to put less money down for projects. You may see more confidence in the economy, even though pumping up all this extra money in the system is not what I like. But in the short run, people may feel confident, and that may temporarily help the car prices that were going down now go back up. So that's why I've said that, hey, I'm just looking at the conditions right now, and there's just a lot of bearishness. And when people talk like me, I become a bit suspicious, right? I'm a contrarian by nature. And when I see all of this going down, I'm like, okay, it's most likely going to reverse, not to the extent that we saw in 2018 to 2021. That bull market was insane. We're not going to see that anytime soon, but we could see a decent, sizable move in the collectibles arena. Not only that, I remember when I had Don on, and Don was saying, when you see all these scams going on in the economy, that may be a notion that, hey, the markets are ready to bottom out. If you looked at what happened in 2020, right? This is more of a market analysis from Don, but he's a contrarian as well. You had Bernie Madoff, right? He was saying like, hey, when that Bernie Madoff news was coming on, that was a better time to be buying than selling for the long term. When you see the media constantly harp on negative news, that may be an indication, hey, do you really want to be aggressively selling? Do you really want to be scared as of that moment? And, you know, I'm just looking at a few other things too. You know, I don't want to make this into an economics video, but I talked yesterday on Dakota's live stream that, hey, the Atlanta Fed is projecting a 3.6 GDP growth. I think that's overly optimistic, but they're positive, right? So someone's either really right or really wrong. Is it the market, all types of markets, or is it the Atlanta Fed, which is projecting these rosy numbers? And it could just be a in-between, right? It may not be as negative as what everyone is thinking, and it may not be as overly positive as what the Atlanta Fed is saying. So it is what it is. Like I've stated, I'm just reading the market based on my understanding of, you know, collectibles market, Federal Reserve, et cetera, et cetera, et cetera. And for collectors and investors, in my opinion, this is a better time to be buying, to add to your collection, to speculate, rather than to be fearful. But once again, I don't see this bull market, if we do have it, last that long. You know, last cycle was like, what, 18 months about? From October maybe to like June 2024. Basically cycles that I'm looking at, I wouldn't be surprised if that topping pattern happens then. You know, I'm looking at Elliott wave theory, I'm looking at Martin Armstrong's economic confidence model. You know, as time goes by, I could analyze it better, but I'm just looking at it from a longer term perspective. So it is what it is. I just wanted to talk about that. Anyways, remember to smash that like button, subscribe if you haven't, comment down below, and in addition, make sure to check out that live stream tonight, guys. Thank you. Bye.